My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey, what's up, BobMortgage Nation? Here's this week's Mortgage Report. Last week was, a bit mixed. Stocks were a little down, mortgage bonds were a little flat, but mostly we had a couple things that happened. New York Fed President William Dudley retired. And that left a little bit of a shuffle within the Fed. We had a couple people that didn't have voting rights, now have voting rights. One in particular is the Fed president from Kansas City. Now she is extremely hawkish. So this is pushing the Fed even more hawkish than what it was, which really lends me to believe that we're going to see 2 more rate hikes now in 2018 to round it out to 4 rate hikes in 2018. So 1 in September and 1 in December. Mortgage Bankers Association actually came out and said that home purchase applications increased by 4%. Now the reason I'm bringing that up, guys, is that's a really strong number. We're seeing a 4% increase year over year, and that's even with our tight inventory and our higher interest rate. So we're doing really good right now with purchases. We had a little bit more drama last week with President Trump and his announcements on more trade war concerns around the auto industry and typically the imports, European imports. So that kind of left the stock market and bond market in a little bit of a tizzy on Friday. So we just wanted to see if we were going to be able to hold that. And really on Friday, we kind of moved ourselves to a locking position. And here's why, guys. Bottom line, we're if you look at my charts right now, we're in a sideways trading range. We don't have really any room between the 50-day and the 25-day moving average. So very little room between on that 50-day ceiling of resistance and that 25-day floor of support. And this week we have some big news around new home sales, existing home sales, and some inflation data releases. And we all know, if you've listened to my mortgage reports in the past, inflation is the arch enemy of bonds. And just because it erodes, right, the fixed return you get on your bond. And as inflation rises, so goes interest rates. They rise as well. And with not a lot of room to that resistance of that floor on that 25-day moving average, I went to locking. I wanted to protect my clients that are in that 10 to 15-day window of closing, because if we get some wrong numbers, we could see the bonds fall, and we have a lot of room for those bonds to fall. Look, bottom line, I've been a mortgage advisor for over 20 years, been blessed to provide financing to over 25,000 families. I watch the markets daily to make sure I can get you the right home loan at the right price. Give me a call. With Bob Mortgage, your dream loan is already within your reach.